All right, good morning, ladies and gentlemen. Happy Monday. We made it through the weekend. Everybody survived, and here we are, ready to get going. Guys, can you hear me okay? I am on the move, coming at you from a hotel right now, so I want to make sure that everything's good. It looks like we are. Good morning, Shogun. Good morning, Daniel. Hope everybody had a great weekend. Got a little study in. Hey, Alex. Focused on simplicity, right? That was the plan. Hey, Jeff, 3558. Good morning. Welcome to the classroom. D, good to see you. Conrad, nice to have you. Man, what should we do today? I think we should talk about rules. What do you think? Talk about patterns, talk about advantages. Guys, we're going to keep it simple, simple, simple. That's the plan each and every day. Before we get into the day, I'm going to forexfactory.com. I do this every morning. This is the first thing that I do every morning when my charts are loading up. Guys, I just want to know where the news releases are. I want to make sure that I'm not going to put myself in front of some sort of emotional response. Um, a market that may jump or bump or spike or just really become too fast to be tradable in the moment. So forexfactory.com gives me this. I go through and I look and I check today's date. It's Monday, May 22nd, and nobody is doing anything today. But what I'm looking for when I'm looking at news, I'm looking for these high impact, these red boxes. I'm also looking for these medium impact, these orange boxes. Guys, these are the ones, if you've ever watched the S&P jump or you've ever seen crude oil spike during those inventories. Guys, it's not what they're saying. It's just the fact that they're saying something and there may be somebody reacting to whatever they say, good or bad. I don't worry about the actual news. I worry about the fact that it is happening. So that's every morning, guys. Checking forexfactory.com. And then I go straight from Forex over to the educational page, and I like to take a look and see what's going on. Everything that you need, guys, for the new user. Everything for anybody that's looking for a level of consistency is available to you. And the 100% available Discord or the tutorial sections here. Guys, there really aren't any secrets, but as John Novak said earlier, there's some bonuses. When you become a client, there's more that's a bit more advanced available to you. But the goal is always simplicity. So we keep you focused, without a doubt, on simplicity. And guys, I'd like to share this too, especially on a Monday morning. And Jeff, 3558, I know this is your first day in the classroom. And guys, there's a couple others of you that are pretty new here. This is your path, guys. This is your path whether you are on day 1 or whether you are on day 1,000 and you still need help. Post pictures in the room. This is how you become a confident trader ASAP, guys. Post your pictures in the room. Post your trades. Show me your charts. Tell me what you're doing. Tell me why you're doing it. Let's have a conversation. I'm here 15 hours every week. I'm live. I'm looking at your charts. We're looking at the live market. And my sole purpose on this earth is to give you feedback on what you're doing great, what you could use a little help with, what you can do better. And if you get in that habit on day 1 of taking pictures and posting, it gets easy and it accelerates the learning curve. And then guys, track your performance in a spreadsheet. Nexgen's provided you the spreadsheet already. Let me pull mine up. Sorry, things are going to pop up in the wrong window today. I'm one monitor short. Guys, by posting your trades in a spreadsheet and then going back and studying those trades, let me see, I think I have the picture in here. There we go. Your first page of your spreadsheet, guys, every morning you're going to study the previous day's trades. You're going to look at what worked. You're going to look at what didn't work. You're going to look at what felt easy, what kept you relaxed, what felt forced, what was difficult, what made you nervous. And guys, a brief historical study each morning using the spreadsheet is going to prepare you for the day. And once again, there's that phrase that keeps falling out of my head. It's going to accelerate the learning, guys. If on Monday all I do is trade into termination conditions and lose a lot of money, if I go back and study that, well, Tuesday I'm in a better position. I know what not to do, right? And the same thing, if on Tuesday I followed rules and I had all the advantages present, On Wednesday, I'm going to look at that and I'm going to have that good feeling about what happened on Tuesday. And it's going to encourage me to continue that path. So make sure that you're using your spreadsheet. And guys, the second page of your spreadsheet is the favorite looks. These are really just pictures of rules being met. And I share this with the class, but it's available to you on the website. It was given to you when you signed up, when you got software. Hey, good morning, Ziba. Guys, this is over 200 pictures of a rules-based entry. And let me give this to you right now in the classroom. I want you guys working and taking pictures, but I'm going to give you a pretty solid foundation to look at right there. If you are brand new, if you're working on your entries, and entries are what we work on for the first 20 days, guys, there are so many great examples for you just to build confidence through repetition. We're going to use this classroom, and you're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Learning rules, guys, understanding what they mean is really the goal for every new user, to be able to identify advantages through the rules and then develop the confidence to take trades when the rules are met. You're going to simulate your trades daily. There's no reason to jump in and say, well, I only learn if I've got skin in the game. It's ridiculous. Guys, use that Monopoly money. Use that simulator. It is 100% like the real thing, except there's no pucker factor because there is no real money being used, which means that you can focus on your execution. You can focus on following the rules. And I try to encourage people, don't practice the wrong trades. Being a simulator millionaire doesn't do much for you. It really doesn't. You're creating bad habits that when you do finally go live are going to work their way into it. Simplify, simplify, simplify. I'm going to say this a million times today. What looks will you commit to? You have to learn the looks so they become easy. Guys, 200 examples of the looks so that it becomes easy. If you haven't gone through and clicked on each and every one of these, spent an afternoon, poured a mimosa, hung out, looked at pictures, guys, click on every one of these. You're going to be so in tune with what an entry looks like, it's going to become easy. Then after class the next day, guys, download that replay data. Look for, on the current day. Retrade it. Fix your mistakes. Take the trades that you skipped. Skip the trades that you shouldn't have taken. And then once again, guys, take pictures of those trades. You should be taking between 15 and 20 pictures a day. You should be taking pictures before you enter the trade, maybe during the trade, after the trade. And you should be posting those pictures in class so we can talk about what you're doing. Repeat this process every day until you're always taking the correct trades. Guys, the trade that we talked about in the first hour here is a high probability trend trade. And this is a trade that typically wins 70 to 80% of the time, guys. If you're focused, if you're keeping it simple, if you're on this one thing, this is my high probability trend trade, this is what I'm looking for. Guys, if you're always taking the correct trades, if you're always winning more than you're losing, well, then you're probably guaranteeing yourself that you can win, right? And that's when you go to one of those prop firms. That's when you test your plan, pass their combine, get funded, trade other people's money, guys. There's no reason to lose money in the futures game, other than maybe a little monthly subscription fee. And we'll talk about that more later. But guys, this is your plan. This is your path. I've seen, gosh, in the last couple years, 1,000 people come through here easily. And the ones that have embraced it are still here, right? I'm looking at a lot of names of a lot of people that posted a lot of charts and asked a bunch of questions, and they're still here. And then there's some people that choose not to take the path, that try to do it the hard way. Guys, there's just no reason for that. Keep it simple, right? Focus on the best of the best, and that's what we're going to do. We're going to focus on a high probability trend trade, guys. A trade where all of your indicators on every chart agree for the trade. Man, you're going to have your strongest triggers. There's going to be nothing in the way, like nothing between you and your profit targets. And this trade that we're teaching, that you're learning as a brand new student, we're only talking about entries. I like to equate learning to day trade very much like eating an elephant. And the only way to eat an elephant without becoming overwhelmed is one bite at a time. So our first bite is entries. And guys, a trade is nothing more than momentum, a clear path, and an entry area. That's it. That's your recipe. It's 3 rules. And guys, those 3 rules are going to come to be on only 2 charts. And you're going to use a 13-2 chart, which is going to be your larger chart. It'll be your slower chart. This is the one that you're going to use the most current bar, and it's going to give you everything that you need to look for an entry. On the 13-2, you're going to be able to gauge the overall trend of the market. If the background is green on your 13-2, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. And guys, let me show you how simple this process is. This is my most current bar, and my most current bar has a green background. Therefore, I'm in an uptrend, although it's not moving, which worries me a little bit. Let me see if crude oil is moving. Crude oil is moving, okay. Guys, somebody do me a favor and tell me what the S&P, hey David, the ES is stuck. Okay, it's not just me. Everybody's ES is stuck. Okay, I panicked for a second because when I'm in a hotel, sometimes I worry that things aren't going the way they're supposed to with the internet. So cool. So we have moving markets. It's just the ES isn't one of them. No worries. But guys, do you see that green? We're only looking for rules to be met for high probability trend trades long. When this background was red, only looking for rules to be met for high probability trend trade short. Guys, that is honest to goodness the first advantage that you can give yourself. As you begin trading the markets, just trade with the trend, right? No reason to fight it. Rule number 1 for the high probability trend trade, 1 of 3, is going to define those strong triggers. It's going to make sure that you have that advantage of momentum, that first part of the equation getting into a trade. Rule number 2 happens on the 13-2 chart, guys. No termination conditions. When that one's true, you then have the advantage of a clear path. 2 out of 3 rules are met on one chart, a big chart, a slow chart. It's a broad stroke of a brush, guys. This is painting your living room wall before you go down and do it around the baseboards and the outlets, right? Big, long strokes. And then when these rules are met, this is where you turn your attention to the 5-1. And guys, it's amazing. This refinement process, taking that one bar and it becomes maybe 25 or 15, 30 bars on the 5-1. This is your entry chart. You're going to refine that broad stroke, and you are going to pinpoint with pretty amazing accuracy where the market is likely to continue. And that's rule number 3. By using that limit order to buy or sell a pullback at an area inside of favorable large triggers, guys, you give yourself the advantage of an entry area, that area where the market is likely to continue. And then the trade is there. It's on. It's only 2 charts. It's only 3 rules. And by following this plan, guys, by keeping it simple, embracing the advantages, you're going to be able to reduce your risk. You're going to be able to maximize your profit potential. And the most important thing is that this high probability trend trade, guys, this is your trade. This is the first 30 days and beyond. The high probability trend trade that's coming after a termination condition on the 13-2 chart, this is a trade that typically wins 70 to 80% of the time. But the most important thing is that it's going to teach you to read your charts. You're going to become a chart reader. In your first 20 days with Nexgen, you are going to be able to fluently look at your charts and understand where the market is likely to go. You're going to understand where the market is likely to continue, and you're going to be able to understand where the market is likely to stop. So my goal for you in the beginning is that simplicity. Become a chart reader. Focus on nothing more than entries. And guys, your entries begin with strong triggers. Rule number 1 says that you must have strong triggers on the 13-2. Well, strong triggers mean in an uptrend, when that background is green, that the small triggers are crossed up. They're above the large triggers that are also crossed up, guys. It's like a pair of scissors wide open, looking for something to cut. And when both triggers are up, when they're wide, this is your best look for buying that pullback on a smaller, faster chart. This is what we call strong triggers. When you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. And you're going to hear in class quite a bit, odds favorable momentum. It's a key phrase. You're going to see it annotated OFM. But guys, when you have this odds favorable momentum, those smalls below the large are wide, they're angled in the direction of the trend. This should be what sets the tone for you looking for that high probability trend trade. That space gives an advantage. And we're going to look for those pullbacks when that space is present, because when the small triggers work their way back inside of the large triggers, we call this a weakening of the large triggers. And when you weaken large triggers, guys, anything can happen up or down. You lose that advantage of momentum, and it becomes this anything can happen scenario. And I took a picture, and guys, I share a lot of pictures in class. I hope you steal each and every one of them. But this is your visual for rule number 1. Odds favorable momentum, easy to define, easy to recognize. Smalls above the large are wide. Guys, this is your best chance, and you see that the market continues up. Smalls below the large are wide, and the market continues down. And you can see that anything can happen. Those weakened triggers, this is what you're recognizing right before a trend change typically. When they don't agree, there's a lot of indecision. No need to predict, guys. Waiting for that odds favorable advantage to get you to the next spot. And I ask a lot during class, guys. I say, hey, are you guys with me? Odds favorable momentum, guys, is the most advantageous look to buy a pullback on your 5-1. And it just happened live in crude oil. We're going to talk about recognizing this entry. But guys, trigger lines are up, trigger lines are strong, and it goes right to that next area. Is everybody cool with that? Guys, it takes so much off the table, so much stress out of your life if you just focus on those strong triggers, guys. Let them do their job. And once you have them, I really do enjoy teaching this stuff. Once you have those strong trigger lines, we're going to make sure that there's nothing in the way. A clear path, right? We've got this odds favorable momentum. We want to make sure that we're not going to smack into anything that may stop that trend, that may reverse the market. And that is termination conditions, guys. And termination conditions are nothing more than a Fibonacci-based indicator that may reverse the market. And your indicators are, let me get to my picture here. Boy, you get spoiled on multiple monitors. I want you guys to know this. Here's your areas, guys. Areas that may reverse the market. Divergence high lines, divergence low lines. Guys, these cyan and magenta lines, these come to be. Hey, good morning, Marshall. These come to be when price creates a pivot, whether it's a high or a low, right? The market goes down and up and down. If that market loses momentum, and this is written behind the scenes, so you don't need to know how it happens, you just need to be able to see visually. There was a loss of momentum at this low. There was a loss of momentum at this high. Well, when price comes back to these high and low lines, it may reverse the market. So visually, we can identify it. Red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. Guys, all of these areas may create a bounce in the market. All of these areas may create a reversal. Price reacts to fibs. And it becomes a pretty easy process of understanding whether or not we expect that area to react. And it's a two-part process, guys. The first thing that has to happen is price reaches an area. These dynamic Renko bars trending down reach support in this particular picture. When price reaches support, just check your trigger lines, guys. Those same trigger lines that gave you momentum, we're going to use those to determine whether or not an area is likely to hold or break. If all of your trigger lines are above the area of support, you're not looking for any more short trades. This area of support may stop, may reverse, may create a huge bounce in the market. And you can identify it easy. Price hits it, triggers remain above, no short trades. Price hits resistance, all the trigger lines remain below, no long trades. And it pushes the market all the way back down to support, but the trigger lines don't break. Not looking for shorts either. Guys, 90% of what you do throughout the day. True story, 90% of what you do throughout the day is just going to be chart reading, waiting for those advantages, waiting for everything to come together to get you ready to take a trade. You'll notice price comes back up. It reaches that divergence high. Remember, this one is a pivot. It loses momentum. When it reaches that pivot again, price comes back and retests. Sometimes it exceeds it by a few ticks. If the trigger lines don't break, guys, we call this a pivot stop out of a divergence high. Don't take any more long trades into pivot stop outs. Don't take any more short trades into pivot stop outs. It may reverse the market, but it becomes even more powerful when it coincides with Fibonacci. So you're going to see this throughout the day. Price reaches a divergence high coupled with Fibonacci, and then that termination condition creates a full reversal. And that full reversal gives you odds favorable momentum. That odds favorable momentum sets you up for looking for the best of the best trade, that high probability trend trade. And then I'm going to scroll up one. Guys, here is another one of those divergence lines. But this divergence pivot on its own, this cyan line coming off of the pivot, all by itself is not a termination condition, because the recipe for termination conditions is that price reaches the area. Price reaches the divergence low, exceeds it a little bit here. The trigger lines never break. Guys, this is that powerful look, that divergence low that creates a full reversal that gives you odds favorable momentum. This is what we call a strong bottom in the market, and this is the precursor for the highest probability trade that you can take, that 5-1 trend trade after a termination condition. Strong top, the precursor for that absolutely best trend trade. And then one more here. I like this picture because there's odds favorable momentum as the market comes into these one-to-ones, right? It is railing down. The odds are favorable that the market will continue in the direction of the trend, but then price reaches one-to-ones. Absolutely none of your trigger lines break through. Guys, this becomes a termination condition. It creates a reaction. It ultimately gives you a full reversal. And then there's one of those tails, one of those potential entries, right? One of the best of the best. A 5-1 trend trade after a termination condition. So I'm going to share a couple more pictures. As I do it, guys, if you're brand new, Jeff, Rob K, guys, those of you that are brand new in here, give me a Y in the room if you're comfortable. Price reaches an area. If none of your trigger lines go through, guys, this is your visual indication. No more trades into that area. These are all termination conditions at a high. You see it at one-to-ones. You can see it at resistance. And guys, here's one of those pivot stop outs. The first one is nothing more than a pivot, but the second one, now you have a pivot stop out. Now price reaches that line. The triggers don't break. That's your termination condition. Guys, steal this picture and save it. And if you allow it to be this simple, if you let it be nothing more than price reaches an area and the triggers don't break, therefore I'm going to sit on my hands. Once again, life is simple, life is easy. And then there's one of those pictures, a pivot, not a termination condition. But when it's retested and the triggers remain above, now it's a pivot stop out. Now it's a termination condition. So guys, here's some pictures from highs and lows. I am going to encourage you to keep it this simple, guys. Either an area is broken or an area is not. And what we've just looked at is all the areas that are not broken. Well, how do I know when an area is broken? It really becomes pretty simple, guys. We're going to look at two different pictures here. When both of your small and large triggers get to the other side of these Fibonacci areas. So for example, if price is trending down and reaches support, and then your small triggers break, and your large triggers get below that area of support, support begins to act as resistance, guys. We consider the area broken. This is when that clear path is present, when there's absolutely nothing in the way. When both small and large get above resistance, resistance begins to act as support. Guys, now the path is clear. So for a brand new user looking for that highest probability trend trade, I'm going to encourage you, either the path is broken or it's not. Either price reaches the area, none of the trigger lines break through, no more trades. Sit on your hands, guys. The market's either going to break or roll. Well, you don't have to predict. When both the small and the large break the resistance, it acts as support. There's another one of those tails with odds favorable momentum. Guys, this is your first. This is your easy. This is your simple. This is going to bring you into what's going to be your first medium probability trade. Remember that we're talking about high probability right now. Your first medium probability trade, guys, it means that most of your indicators are going to line up for a trade, however a small issue exists. The issue that's going to exist is an area with the potential to break but has not yet broken. When you reach this red Fibonacci resistance, if the small trigger lines break through, and they break through with odds favorable momentum, such a key part. Strong triggers break areas, guys. When the smalls are through and the large are not, we call this a 50-50 look. And not because of your chances of survival, because 50% of your trigger lines have gone north of resistance and 50% remain below. Guys, 6980 becomes an area with the potential to break. But it hasn't broken yet. Rule number 2 isn't met. It's not a clear path. It's no longer a high probability scenario. And sometimes areas break with that odds favorable momentum. And as you see down here, sometimes areas don't break. Sometimes there gets a little bit of overrun and the market reverses. When we talk about entries, we're going to talk about your perfect entry for a 5-1. But once again, it revolves around advantages. It means letting this be your only issue and having absolutely zero issues on the remainder of your charts, guys. So is everybody comfortable? No triggers, no trade, right? No clear path. Both triggers, the path is clear. Look for those rules to be met. And then as you grow outside of, after your first 20 days, after your first study, getting the best of the best, you're going to start to be able to recognize when areas have the potential to break, guys. But ultimately, understanding that that clear path is needed for the recipe for a high probability trend trade to give you the absolute best chance of success. And I'm going to look at one more termination condition with you. And when we go to the termination area section, there's a look on this chart, on your 13-2, that bigger, broader stroke of a brush, where all of your trigger lines break through resistance, right? Or break through support, but then it seems to turn. It hasn't bounced off of anything. It just decided to go up. And then the same thing up here, even with that odds favorable momentum, no area is reached, and the market decides to go down. We're going to be able to use divergence on a smaller, faster chart to help identify this change. 3 divergences in the same price range may terminate the trend. This is true on your smaller, faster chart. This is true on the largest chart you own. This is true on range charts, daily charts, minute charts, guys. All divergences is a loss of momentum. When this pivot forms, it means that momentum isn't following. When it happens 3 times, it may terminate a trend. You see it from highs and you see it from lows. And it becomes more powerful when those small triggers work their way inside of the large triggers. Do you remember our trigger lesson? Odds favorable momentum, smalls outside, the market's likely to continue. Weakened triggers, anything can happen. So now we have 3 visual losses of momentum, and we have weaker triggers. And then guys, when that final pivot's higher than the previous from a low or lower than the previous from a high, it's a head and shoulders pattern. It adds even more weight to that potential termination condition. How you're going to use this in the beginning while we're embracing simplicity is if you see this from a low or this from a high, it's just giving you an indication, right, that the market may be changing. You won't see it on that broad stroke of a brush, but that 5-1 will help you identify. Bobby says bingo. For my new users, bingo means that Bobby took a trade and it hit his profit targets. Oh, you did. You took that great trade on crude. Nice trade. We're going to talk about how Bobby was able to get into that market, how he was able to reduce risk, and how he was able to have the confidence to get to that profit target. And we'll go back and look at that, guys. I embrace in the first hour rules. We're learning the rules. We're learning the looks. We're understanding the advantages, right? We've covered a momentum look, strong triggers. Now we've talked about a clear path, nothing in the way. Let's find that entry area, guys. Where do we get into the market? Well, rule number 3 says that we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. buy a pullback, right? What's a pullback? A pullback is nothing more than a small retracement in price that's counter to the underlying trend. So if everything is up, right? Everything is up. The large crowd says that we have momentum. The large crowd says that there's nothing in the way. Guys, this is area and direction. This is an opinion of the large crowd. We're going to let the small crowd, the yahoos willing to fight the trend, willing to fight momentum. These guys are going to force a pullback, guys, and that pullback is nothing more than a small retracement down when everything says up. And this is where Nexgen users are able to really take advantage of Fibonacci, because when the rules are met, this is the look on your 5-1. Everything is strong, right? The triggers are strong. The bars are strong. Your large triggers should be wide, angled in the direction of the trade, overlapping one on top of the other. Let's just focus on nothing but trigger lines for a second, guys. This is what we call favorable large triggers. It's that overlapping one on top of the other. This is going to create the smallest area where the market is likely to continue, that smallest window of opportunity. The tighter they are, the easier your trade becomes, the less risk you have, and the more profit potential you find yourself with. So when everything says up on the 13.2, when there's absolutely nothing in the way on the 13.2, guys, we're going to get ready. We've made the decision that it's time to look for an entry. You've turned your eyes to your 5-1 chart, and all you're doing is looking at the areas that may be by those favorable large triggers. Trend trades come from areas, guys, and those areas can be fibs, they can be mid bands, or it can be those yellow 1-to-1s. Fibs, mid bands, 1-to-1s, and we want them to be inside of the favorable large triggers. Conrad, so when you open up NASDAQ, it opens two charts. So John Novak went through that simplicity once again. 34.5 is your large chart. 13.2 is your small chart. So the same way that we use that 34.5 or that 13.2 and the 5-1, because of the speed of the NASDAQ, Conrad, it's the exact same patterns. He's using them on a higher time frame to slow it down. The 5-1 chart is so fast on a NASDAQ, it's almost untradeable. But if you wanted to make a 5-1 NASDAQ chart, are you on NinjaTrader 8 or NinjaTrader 7? NinjaTrader 8. Just building new charts is right there. It's just file new chart and building up that 5-1. But man, Conrad, I can tell you, NASDAQ on a 5-1 is like a methed out weasel in a box. I mean, it's tough. It's so fast. Just came back from Vegas. Hope you had fun, man. Yeah, embrace that setup and look for the exact same patterns that we're talking about, right? Look for the odds favorable momentum. Look for the no termination conditions. Look for everything strong on your 5-1. And then just like on any higher time frame, looking for those advantages. Guys, on the 5-1, your pullback to your areas is going to start with a reversal bar. So Conrad, on your 13.2, you're looking for a reversal bar. This reversal bar starts the beginning of a pullback, right? That little retracement of price counter to the underlying trend. And rule number 3 says that I'm going to use a limit order to buy or sell that pullback, but it has to be at an area inside of favorable large triggers. And that's the key. This is your best entry, and great entries create manageable trades. Guys, I'm going to right click right here at this mid band, a tick or two above, and I'm going to activate a limit order. And I'm doing this because I've created a window of opportunity. When the reversal bar prints, let me take a picture. When the reversal bar prints, I'm going to circle from the top of the triggers to the bottom of the triggers. And guys, these triggers are coming up like a shark about to breach. And I'm going to look from the lowest point of support to the highest point of support. And I'm going to activate a limit order right at the top of my window. And I'm right at the top of my window because of the odds favorable momentum on the 13.2, because of the clear path on the 13.2. I'm going to activate that limit order at the top of the window of opportunity, and I'm going to wait. And either the market's going to come back to me or it's not. I'm not in control of that. But if the market pulls back to that highest point of support inside of favorable large triggers, I'm in a long position. I'm long here at 79.21. My initial stop, guys, my protective stop goes below the window of opportunity where the market should not go. The market may bounce from the top, it may bounce from the bottom, and there's about a 70 to 80% chance that that's what's going to happen. But if it goes beyond that window, I've got to stop waiting. I'm saying I'm no longer in this trade. This is not my trade anymore, but I'm in this trade with the advantage of momentum, with the advantage of a clear path, with the advantage of that entry area inside of favorable large triggers. And guys, I'm telling you, I'll take this trade every time it sets up, 1,000 out of 1,000 times, because typically 70 to 80% of the time on that high probability trend trade coming from a termination condition on the 13.2, guys, this is my result, profit target reached. Because I wait for the pullback, I can reduce risk once it begins to go in the direction of my trade, guys. My stop comes up, I've reduced my risk. Because I let the market come back to Fibonacci inside of those trigger lines, I've increased my profit potential. Guys, this is your best of the best. This is your first trade. If you are brand new, give me 20 days where all you do is look for this best of the best trade. If you are looking for consistency, maybe you're coming back to Nexgen. Maybe you are coming back after trying to do it a different way, trying to catch everything. Guys, let this be the one. Because when you have odds favorable momentum and you have no termination conditions, guys, that's your best chance of success for an entry inside of favorable large triggers. And this is your two chart look. When the rules are met on the 13.2, remember those tails? If we circle the tails, I'm not trading tails. What I'm trading is areas inside of favorable large triggers. If we go back historically and we circle these tails when the rules are met and it lines up with an area inside of favorable large triggers, guys, I want you to take a picture. Hey, good morning, John P. And I want you to use that call out button, whether you're on TechSmith Capture or whether you're on Snagit, guys. And I want you to get in the habit of writing those rules. Odds favorable momentum, yes. No termination conditions, yes. Reinforcing those advantages, right? Entry at area inside of favorable large triggers, right? We're reinforcing those rules every time, guys. Take this picture. You can copy it, put it in the room. Say, hey, Mark, did I read this right? And if the feedback is absolutely, you killed it, you crushed it, Jeff, great job, I can't believe how smart you are on day one. Let's take that picture, right? Save it to screencast. Get that link and put it into your spreadsheet, guys, and call it something creative, like rules-based long, right? I'm going to come back and I'm going to study this picture over and over and make sure. In Boyota, that's got to be a decision that you make. NinjaTrader 7 works just fine. If you're comfortable, if you're happy on NinjaTrader 7, by all means, feel free to stay there. NinjaTrader 8 creates a certain level of challenges, not anything major in my opinion, but there's a little bit you have to go through in the preparation. Making sure that you have the right computer for it is the first step. I see John Novak typing. I'm sure that he's going to come in and say something. I do most of my analysis on 7 personally. I do my entries on 8 because I do use an Apex account. But that's up to you. It's got to be a personal choice there. So guys, that's your high probability trend trade, right? Odds favorable, no terminations, you're welcome. Areas inside of favorable large triggers. Give me a Y in the room, especially if you're brand new, if you're coming back to that level of simplicity. Guys, let me know that you're cool with this. This is your best of the best. Guys, this is the one that's going to create a foundation. And really the goal is to create a trading plan. And let me show you this. Sorry, guys, I'm all about giving you things in the room. This is a high probability trend trade checklist. This is the first thing I'm going to share, right? These are the conditions that need to be met for you to take a trade. Guys, I'm going to put this checklist in the room to keep you focused on simplicity for your first 20 days. There it is. You can download it. You can click and drag it. Take that checklist, guys. Make it yours. For those of you that are brand new, I'm going to give you another checklist, guys. This is your high probability trend trade checklist, but I stole pictures from the user guide, from the manual, to visually show you exactly what you're looking for every time these rules are met. If you're a brand new user, this is a great study guide as you go back and look for these trades to make sure that the conditions are what they need to be. And then one more. I'm going to give you this example plan first, guys. And this is nothing more than defining your entry areas. This is giving yourself a plan to only focus on entries, to look at the best of the best, guys. And this is an example of how to write a trading plan. And I want you to see, it's a page. It's not even a page. It's like 3/4 of a page. And I've written in a lot of extra stuff just to tell you what's going on. Use the phrase "my trade is." So all of you that are new, right? Caesar, Jeff, use the phrase "my trade is." My trade is the high probability trend trade. But to enter the trade, the conditions of the checklist must be met. I've put that checklist on there one more time, because these are the conditions that typically get me 70 to 80% winners, right? When I'm following these simple rules, my chances of success go up exponentially, guys. Is the market coming from a good top or bottom? Is there a termination condition that's creating a full reversal? If this is a yes, that's that 70 to 80%. It increases the likelihood of success, but it's not mandatory. You can still have an amazing trade without a good top or bottom, but that good top or bottom is going to really kind of sweeten the pot. So if you're checking yes to odds favorable momentum, to no termination conditions in those areas, those entries, guys, this is your trade. This is your focus. And the only thing that you're worried about is nailing that entry, right? Rule number 3, getting in at the best spot, because the best spot creates a manageable trade. I want you to take pictures of that perfect entry. Guys, you've got a great head start. Here's 200 of them. Take pictures of that great entry. Put them into your spreadsheet. This is my long. This is my short. I want you to study them. Go back and circle those tails. I want you to steal pictures from class. When somebody posts a high probability trend trade, guys, steal it. Make it yours. Grab them from the manual. But in the first 30 days, the more pictures you take, the faster you're going to get to where you want to be. Guys, this is 20 days of entries. Is everybody okay with that? Remember, we said that magic word over and over. Simplicity. Guys, don't look for everything. Look for one thing. Look for the entry. Let me show my silly picture. There's 2 ways to approach learning to read your charts, guys. You can look for everything and spend months trying to figure it out, or you can look for the one thing. Let it be obvious. Let it be right in front of your face. Because once you get this, everything else falls into place, guys. And then next, you're going to define your management plan. Guys, Nexgen gives you everything you need as a new user to find success in the markets. We found that a very straightforward, mechanical approach, guys, the same way you're going to mechanically approach your entries, you're going to mechanically approach your management. I'll take 2 contracts. My initial stop will be 12 ticks. I'm going to move that stop outside of the window of opportunity, right, where the market shouldn't go. Once I get a reversal bar in the direction of my trade, I'm going to move that stop 2 ticks above or below the reversal bar. I'll take profits on my first contract at $100. It's a quick hit. It's quick profits. It's in the bank. It's in your pocket. Guys, there's a dopamine kick that comes with that victory. And I'll move my stop to break even manually. I've been paid, and I have absolutely nothing to lose, guys, and that makes it easy for me to wait for that second target to be hit, that $200. This is mechanical, pragmatic, methodical, guys. It reduces opinion, anxiety. There is no hope in this approach. It is nothing more than if then. If this happens, then this is what I'll do. And here's the key right here, guys. And this is why I embrace simplicity so much in this classroom. If you allow this to be your path for the first 20 days, you're going to understand how to read your charts. And that's really the goal. You'll understand fluently where the market is likely to continue. That's your entry point for a high probability trend trade. You're going to understand where the market is likely to stop. That's that termination condition, right? That's that area where the market's likely to end, or it's that anchor for that beautiful trade. And you'll understand where the market is likely to go. And that's how you're going to develop those profit targets. The idea is to build a foundation capable of winning consistency, right? Capable of winning consistently as you expand your knowledge base through repetition, guys. Taking the absolute best, that trade that's been proven to typically win 70-80% of the time, to create success before you try to expand. Guys, that's what we're looking for here. I'm going to give you this example plan as well. If you are brand new, make it yours. Guys, all you have to do to make it yours, kid you not, is put your pictures in there. Annotate your charts, put your pictures in there, and it becomes yours. Any questions? Guys, this is our first hour. This is really what we do. We're focusing on the absolute best of the best, looking for advantages. And then I want to go back to Bobby's trade that we saw. Remember that circle tail, guys? After the fact study. Can we go through this together and pick out an entry? New guys, can I get you to help me with this? On the 13-2, we have odds favorable momentum, right? And it's coming from a termination condition. Price reaches 1-to-1s. Absolutely none of the trigger lines break through. It creates a full reversal. It gives odds favorable momentum. And guys, this is the look on your 5-1 when this is happening. Everything says up, everything is strong. We've got that area that we're coming from. And on my 5-1 chart, I'm waiting for a reversal bar. Everything says up, and I want that 5-1 chart to tell me that the market's coming down. At the time of this reversal bar, I'm going to create a window of opportunity, guys, and it's going to go from the top of my triggers to the bottom of my triggers. And then I'm going to refine that trigger to my areas of support inside. Guys, we trade from lines inside of favorable large triggers. Give me a Y if you're with me. Reversal bar, this is your window of opportunity, guys. This is per the rules where the market is likely to continue. Your job, my job, is to right-click. Whoop, the market's trading on the wrong side of it. To right-click and put a limit order right at the top of that window. I'll tell you what, let's make this sandy brown. That'll be our limit order color. And there's nothing to do at this point, guys. You're just going to wait. But look at this. Termination, full reversal, odds favorable. You even had that small chart, right? 1, 2, 3, 4 divergences, weak triggers. Everything says we've hit a bottom. Guys, with Fibonacci, you know where tops and bottoms are likely to happen. I've got my limit order in, and my only job is to wait for the market, guys. And it comes down, and I get nervous. What if I miss it? What if it goes without me? Hold fast, hold true, guys. Wait for that to happen. And there it is. You've entered the market. New users, you're going to get scared. And I'm going to see a lot of you in at 96, afraid the market's going to go without you. And that's why we take so many pictures, guys. This is why we focus on one thing in the beginning, because you're developing trust. You're now in the market at 71.87. And let's go through that mechanical management plan. So there's a stop outside of the window of opportunity, outside of the large triggers, guys. It's about 13 ticks. I'm going to make your stop red. And when we talk about profit targets, your first profit target from 87 is going to be 97, guys. That's $100 right there. Let's make it green like money, right? And then your second profit target. If you're keeping that mechanical, that methodical, the market has to get to 72.07 to take profits on a second contract. Is everybody comfortable with what we're looking at right now? This is your management plan. This is your basic methodical. I know there's a lot of lines. Odds favorable, everything says up from a termination. You identify the window of opportunity, place your limit order, and guys, you're in this trade. There's nothing to do. Either your stop gets hit or your first target gets hit, and we're waiting for a reversal bar in the direction of the trade, guys. And it goes against you, and you start to get nervous. You breathe a little faster. You lean into your monitor. Your palms get sweaty, right? And it comes down a little more, and you're thinking, oh, dear God, what have I done? I sure hope this wins, because you haven't developed the trust yet. And then you get a reversal bar. And guys, that 13 ticks of risk goes down to about 6. What do you think, guys? From 13 to 6, reversal bar in the direction of the trade. Oh my gosh. We've minimized risk by waiting for the pullback. And now there's nothing to do. We either lose this trade, and it's going to happen, right? Anything that wins 70% of the time has to lose 20 to 30% of the time. Sure. So, Walter, a limit order means that I'm waiting for the market. So when this reversal bar prints, I'm literally going to right click. Let me go to the live market real quick. If I right click above the current price, sell limit 2 means that if the market comes up and hits this order, I want to be in a short position. If I right click below price, limit order 2 means that if the market comes down to this area and reaches 71.34, I want to be in a long position. I expect the market to go up. So by using a limit order, it does nothing more than allow us to wait for the price to come back to that best of the best spot, right? So I had a limit order waiting for the market to come to me. I don't chase the market. I don't have to, guys. Our methodology is too solid for that. Does that make sense, Walter? So there is no waiting and then hitting buy, right? There is no waiting and jumping in. Guys, you've pinpointed where that market's likely to continue. When that reversal bar prints, your risk is minimal. There's your profit target. And guys, there's $100 in the bank. In a matter of seconds, your risk is now 0. You've been paid $100. You have absolutely nothing to lose. And look at the momentum, guys. Momentum carries you to the next area. All we have to do is get up here to 72.07. Our only options at this point, guys, pragmatic, keeping it easy, is we either get stopped out, break even, we put $100 in the bank. And guys, let me tell you, you do that 5 times a day, that's a $2,000 week. That's an $8,000 month. Look at this with all the advantages. There it goes. 72.07 is reached, guys. This is your high probability trend trade. This is a $300 trade with the advantage of momentum. Whoops. With the advantage of no termination conditions. And with the advantage of having entered the market where it's likely to continue. Your job as a brand new user is to scroll back, to look for these conditions, to circle these tails. And if they line up, take that picture, guys. The first half is taking the picture. The second half is making sure that you are verbally talking about what got you into that trade, right? Odds favorable momentum. Yepers. No terms. Yes, absolutely. And guys, this is the perfect entry. What's the perfect entry? No divergence on the 5-1, right? Strong triggers. Small window of opportunity. Guys, this is a trade that I'll take 1,000 out of 1,000 times. This is a trade I get mad at myself if I miss it. The one thing that we didn't talk about at entry is that the smalls were above and the large hadn't quite broken the area, guys. Strong triggers break things. This is one of those 50-50. This is one of those medium probability. This perfect entry should be a prerequisite on a 50-50 trade. Does that make sense? 50-50 trades. When an area has the potential to break, let your entry be perfect. Make sure that it's coming from a great top or bottom. Guys, this is the perfect one. And Finman, John looks like he just answered your question there. But those second sets of lines, I'll just say it. So when we talk about large triggers, yeah, they're synthetic triggers. And synthetic means they come from a different time frame. So your synthetic triggers on the 5-1 are the 13-2 large. So they're still large triggers. They've just been pulled over. And then when those two work together, right, when they're harmoniously one on top of the other, cranking in the direction of the trend, that's when we call them favorable large triggers. And why we don't call them favorable large and synthetic, because they are both large triggers. It's just one's from a different time frame. Does that make sense? Awesome, cool. Guys, this is it, right? Put it in the room. Let's make sure that we followed rules. Let's make sure that everything's the way it needs to be. Share it to screencast. Guys, every time you share to screencast, it is forever saved in the cloud. Come to your spreadsheet and get it in there. Call it the perfect long. That's the entry, right? That's the entry to get. Conrad, will you do me a favor? I see you posting these single charts in here. Do me a favor, Conrad. When you post in the room, especially if you're looking for feedback, and I hope you're looking for feedback, give me both charts, man. Let me know what was happening on your large chart that made you look for an entry on your small chart. And then the next half of that, and guys, this is for everybody, not just Conrad. The second half of that, and guys, I really think this is the most important part, is annotate your charts. Don't just show me the entry. Show me that you know why you took the entry, or at least why you thought the entry was the right entry to take. Guys, it's this on your charts that lets me gauge where you're at, right? That lets me know that you understand the momentum or the termination conditions. It lets me know why you're looking to get in where you get in, and sometimes even where you're looking to get out. And man, I love this one. If you're nervous or anxious or confident, tell me, because this is very telling as well that you're trusting the rules. So give me all that great information every time. Guys, I can read your charts without the annotations and probably know what's going on. The annotations are for you. The annotations are reinforcing these advantages, making sure that you're reminding yourself that this is why you got in, that these are your advantages. And if you're annotating your chart and you can't say strong triggers, you know 100% which advantage you're forfeiting, right? You're making life a little bit harder on yourself. No reason to do that, guys. Embrace it every time. And this is crude oil live chart, guys. Once again, 90% of what we do is being patient. Price reaches resistance. No trigger lines go through. No long trades. Price reaches support. Trigger lines don't break through. No short. Anyone ever been chewed up in consolidation? Guys, Fibonacci lets you see it, right? Support holds, resistance holds, support holds, resistance holds. Oh my gosh, it's range bound. All you have to do is let that range break, right? Rule number 2 keeps you safe. Such an important role of Fibonacci, guys. The big pocket investors, right? These deep pocket guys, these institutional traders, they know these numbers. And now you know these numbers. And they're going to react to these numbers. And now you can wait for their reaction. You do not ever have to be first, guys. I can't stress that enough. I haven't used this one in a while. Two types of people in the market. There's sharks and there's remoras, guys. The sharks move the market. The sharks create momentum. The sharks react to Fibonacci. Guys, we're not sharks. Unless you're moving $1 billion in your account, we're the remoras. We're these guys that let the sharks establish the trend. Let them get the momentum going. Let them be clear of any problem areas. And we're going to take our piece of the pie, guys. We're going to use that high probability trend trade, right? We're going to let the sharks make everything happen. And we're going to be Remoras over here on the side. We're not bottom feeders. We're not at all. We're advantage seekers. The sharks create the advantages, guys. There's your guy that tried to be first. He's getting sucked into the mouth right now. It's just a funny little analogy to help you recognize. Market is absolutely stuck in between areas, right? Guys, here's that S&P. They finally broke out. And now we're waiting for that odds favorable momentum. We're waiting for it to give us a clear path. We're waiting for that entry inside a favorable large trigger. So guys, this is your first hour. And in your first hour, all we're doing is reinforcing these advantages. I'm going to give you one more trading plan, guys. I gave you the first one. You're brand new, focused on entries. This is your second one. After 20 days of learning to take that great entry, after 20 days of feedback, after 20 days of picture posting, you may add that 50-50 trade, right? Guys, I put in a set of rules for 50-50s. I put in pictures of what a 50-50 looks like, the smalls through the large knot. And then I put in a picture of what your best entry should look like, guys. And you've got to insist. We're doing this to make money. Your money is worth a perfect entry on the 5-1, right? If we have a 50-50, if you have a 50-50, the smalls are through, the larger knot, you need to insist on no divergence, on strong triggers, on that small window of opportunity. Guys, that's your best chance of success on a 50-50 trade. It should be coming from a good top or bottom. There should be absolutely no problems. And they have to be managed differently as well. They have to be managed assertively. So guys, I'm going to give you the second plan. As you take 50-50 trades, we will compare it to the plan. We'll talk about the entries. We'll talk about the best of the best and the advantages. And we're going to start that up when I come back. I'm going to leave you with the S&P. We'll see what happens. 13.2, you got your 5-1. Guys, I put these little green dots on here on accident. I need to get them off of there because I don't want you guys to be confused. And I think that's the one. So I'm going to let this recalculate and give me that new look, guys. As we come into the second hour, I want you to post any pictures that you have. I want you to ask any questions that you have. I want you to embrace the idea that you're new, that you're keeping it simple. How do you, Caesar? How do I what? That was an incomplete thought. I'll stick around for a second. How do you close a bid? So if I have an order waiting, so for example, if I have a sell limit, I've got this X right here. We'll cancel it out. And then Caesar, if you're in a position and you want to close it out, there's a close button right here on NinjaTrader 7 and NinjaTrader 8. Is that what you're asking? It's not working. You can't close it out. So you have like a hanging NinjaTrader 7 or 8. You think 7? I'll tell you what, one thing you can do, it's 8. So Caesar, is it orange? And it's sitting there and it won't go away? Just shut down and reopen. And that'll usually get, rid of them. Just shut down your 8 and reopen. Make sure you save your workspaces, and that should take care of it. And then here's John Novak. When you get order that's pending but will not cancel from Control Center, select Tools, Database Management, check boxes, and reset. There you go. That's even better. Thank you, John. Guys, I learn every day too. And then John says you don't have to get rid of it to continue, right? Make your killing, and then when you're done, fix it. Thank you for that. Guys, how cool is it that the CEO of the company, the guy that wrote the software, that day trades it every day, comes in here and offers tips and tricks? I don't know. I appreciate that. I think that's pretty cool. Don't tell him I said that, though, because he is my older brother, and I don't want him to get a big head. Guys, there's that S&P, right? Odds favorable, 50-50. The small triggers are through, but the large triggers are not. I want you to see from the bottom of the triggers to the top of the triggers. Guys, from the highest point of resistance to the lowest point of resistance, you have 16 ticks, 4 points, $200 of risk, guys. That's a lot of risk on an area with the potential to break, isn't it? You have to make the determination whether or not that's a trade that you want to go after. I'm going to take a few minutes, guys. When I come back, we're going to start looking at the pictures that you post. We're going to talk about it. You're losing momentum on the 13-2, or Caesar. You went from really wide and odds favorable to back to the large. Great observation. That's not your best look, is it? And now you're losing momentum on your 5-1. You see it with divergence. So a 50-50 trade is a problematic in itself, right? I like it. Momentum's waning, area's not broken, problems compounding. So guys, what you just did there, and man, I'm having like a proud papa moment. What you just did there is you said, I don't have a clear path, and now I'm losing momentum. I don't have the advantages present to feel good about risking my money. Guys, that's brilliant. And if you're doing that already, Caesar, congratulations, you're on an amazing path. It may continue down, and you have to be okay with that, right? But the advantages are gone, and we trade advantages. So I'm going to leave you as price pulls into support into these one-to-ones. We'll see what happens. I'll be back in about 5 minutes, guys. Find all my stuff to mute. All right, let's get this second hour going. Man, the S&P sure is going down a lot, isn't it? Woo. Look at that. Lost some momentum, lost some momentum, lost some momentum, and there's that higher push that we usually see coming through, right? We know that it's probably going to push higher because it's losing momentum. So waiting for those advantages. Guys, so when I go and I look at your pictures, I like to share this so you guys don't think I'm ignoring you. I have to scroll all the way up to the top, all the way to the bottom, and I go back and forth so that I can get you everything that you need. So I'm going to come through and I'm going to start looking at your pictures and we're going to see what's going on. Gary got us started today. And Gary says, look at that, termination condition creates a full reversal. And Gary caught the HVA trade. Beautiful trade, Gary. Gary taking advantages of bottoms, right? Strong bottoms. Using that 8-range chart right at those strong small triggers to take an opportunity to go up. Gary, good looking HVA trade. Termination conditions sure do help. Oh, and you missed the trend trade annotating the chart, but absolutely, that was the picture perfect trend trade. Look great. D was watching crude. All right, D, we're going to have to talk about this one. Are you with me? What happened? With all this momentum and absolutely nothing in the way and the most beautiful entry ever, how did you manage 2 ticks on that trade? Your confidence. All right. That's okay. So D, you're learning to trust the market right now, right? You're learning to trust your rules. You're learning to trust the advantages. And it's hard. Are you on simulator? Cool. So D, if you and I went to Toys R Us right now and we bought a Monopoly game and we took all that money out of the bank on a Monopoly game and we threw it in your driveway and set it on fire, would you panic? No. So D, this is Monopoly money, right? This isn't real. You nailed your entry. Oh, that's a beautiful entry. No worries at all. So D, let that management run out, right? Keep it methodical because you're building trust right now. Just let it play itself out, especially on simulator. Take that great entry and man, just don't even worry about it. Because trust comes from repetition, right? So D, trust comes, you try to trade it like it's your money. That's okay. So let's talk about it. If you're trying to trade it like that was your money, is that how you want to trade your money? 2 ticks on a 4 lot? Do you want to make $80 when you should have made $1,200? No, of course not, and that's okay. So D, you don't have the trust or the confidence yet to trade it like it's real money, to trade it like it's your money. So now what you have to do is you have to develop that trust, right? You have to go through and nail those entries, and every entry, D, is a management opportunity. Every beautiful entry creates a lesson. So your next annotation, D, is I want you to go back, okay? And I want you to take this picture and I want you to do this. Are you ready? You're going to love this. You ready to build some confidence? So now we're going to work on your management a little bit. This look says we have a great shot at going to the next area, right? Do you agree with that, with the momentum? A strong bottom improves chances of the win. And now when we come over here, strong triggers, smalls outside. Wow. So you start going through. Caesar, you can't give up yet. You just got here. And D, the one thing that I always ask myself when I'm in a trade, when I'm learning to manage, is what changed. And this is the lesson that helped me so much. And John Novak did this for me. What changed? Mark, from the time you enter till the time you exit, what changed? You still had odds favorable momentum, right? You still had no termination conditions. You still had strong triggers. And D, for me, it was a matter of vocalizing it. So as I'm taking this trade and I'm learning to manage, and D, I don't want you to think that you're alone in this. I used to take 25 trades in a day and I'd be up 25 ticks because I would spook myself out of trades because I hadn't developed that trust yet. So I had to go through. And the method that worked for me is simply saying, what changed from the time I enter the market and just watching it in the moment? What's changed? I still have strong triggers, right? I still have this, I still have that, I still have these advantages. And D, anybody can learn to manage better, but one of the keys is just letting it run. While you're on simulator, I want you to get in the habit of letting it run. Let it do what it's gonna do. Embrace that there will be losers. Embrace that there's going to be times when you do get run over. But the flip side of that is know that when it looks like this, when it's this good, 70 to 80% of the time, it's going to that next target. And that's all it is. Great picture, amazing entry. And if that's what your first 20 days is of these amazing entries, you're on a great path. Let that simulator play out a little bit though, man. That's why we use simulator. It's hard to do, right? Oh, absolutely, man. We're going to do this until everybody gets to where they want to be. This is the fun stuff. Once you get the entries down, everything else becomes pretty easy. It takes time, it takes repetition, but man, once those entries are ingrained, look at that entry. Virtually no risk. First target, no risk. Everything says go, right? Bobby, it caught you. And you know that it's repetition because, guys, when we did the play-by-play in class, it's the exact same numbers. Repetition breeds confidence so much. Bobby, the only thing that I can say on this one is that your stop is just above an area of support inside of favorable large triggers with no termination conditions and odds favorable momentum and coming from an awesome bottom. So if that stop gets hit, I hope your mindset is that I'm going to get back in the trade. Because you have a stop right at a rules-based entry. And that's one of those management ones as you grow. Guys, if you're keeping it mechanical, take profits, break even, that's perfect, right? But even break even at 87 puts you behind the mid-band just in case. Oh, you're using the trailing stop? Right on. But you do see how that's like the worst place in the world for a stop, right? Because I didn't at first. I like a trailing stop. I really do. I think it's great. But, man, that's a lot to give back, right? Like, that's $110, and it's $110 right at a mid-band inside of favorable large triggers. I don't know. I don't use trailing stops, so it's hard for me to come up with one. But I think in my brain, if I'm going to trail, I like your 6 ticks, right? You're below the small triggers. And then if it comes back, you make that money. And then you just jump back in and make it again. Great trade, Bobby. Beautiful trade. I'm glad you hit the profit targets. Feels good to say bingo, doesn't it? And then Zeba, let's see. Not a perfect top. Oh, so small. Let's see where we're at. Zeba, you're going short. I'm trying to see where you went short. You're fighting triggers everywhere, Zeba. This doesn't look like the plan, right? Well, you went short. But whether you were going short or long. Okay. So if you're going short, your synthetic triggers are going up, right? That's a bad look. And if you were going long I could get on board with right here for sure. And it looks like you did and you got paid. You went with the momentum. You went with everything. But here it's just too soon. Does that make sense? So where you went short, odds favorable momentum, you gave me 3 dots. Not a yes or a no, because it's not, is it? The large are up, strong, and the smalls are down, and not even below. No odds favorable momentum. No. No area inside of favorable large triggers. Your trigger lines don't even agree. So Ziva, just an observation. You took 41 trades, right? In 60 days, something like that. And they all looked the same. Do you remember that? And you said, I'm going to go live. I'm going to get my Apex account. Since you've opened your Apex account, I think 1 out of the last 5 that you've shown me have fit the plan that got you to Apex. So, guys, just because you go live, just because you go Apex, don't get out of the habit of writing your rules, right? Longevity comes from being calculated and having advantages. Don't abandon your plan because there's money at risk, right? Embrace your plan. Your plan's success should be what got you willing to risk real money. All right, Gary, taking those NASDAQ trades, right? Big chart says more up. You get in on the smaller charts, just a big trend trade. And then that pivot stop out might have held that one a little long with divergence at a pivot stop out with weak triggers. Nice trade, Gary. And then Ron, everything says up. Everything has momentum. Absolutely nothing in the way. Same trade every time. Super strong triggers, no obstacles. Guys, this is the secret. One of the signs that you're becoming on your way to becoming more profitable is all your trades look the same, guys. Because it means that you're following a plan. If I go back last 50 trades from Ron, 48 of them look exactly like this. Such a key part to success, guys, is consistency. The same thing over and over. The more variance that you put into your willingness to take a trade, it creates challenges. John Novak says, high probability trend trade long. Each of your 4 charts agree for easy longs, regardless of the market, right? Guys, this is the NASDAQ, but look at this. Every chart says the exact same thing, right? Every chart says up. Every chart says momentum. Conrad, you saw it on that NASDAQ, right? That's a good look. Same thing. And then John's live order in the market never filled. Man, and it happens sometimes, doesn't it? Oh, that's frustrating. They get so close and they never get you. That's where some people will just start jumping in and then getting run over and wondering what the heck went wrong. Yep, Gary, right into a termination condition, right? Price reaches support, absolutely no trigger lines break through. Not quite a 50-50, it's just a just a termination. I'm glad you got out quick, right? Nice job. Gary took a shot, managed assertively. Let's see what we have. Conrad, same picture. We saw that one. Good one. Z, let's see what you got. And guys, remember, everybody's going to have a different plan. This is the S&P. And Z, you got in. Beautiful. Your 21.3 says everything is going up. Your 13.2 is in a bit of a transition stage, but you let everything roll the same direction. And then you find your entry on a smaller chart and take it all the way up. I love it. Then everything turns, odds favorable. And you take a little bit of a momentum style all the way down off of that good termination condition. Z, not 100% odds favorable or high probability, but amazing chart reading, right? Once you guys learn to read your charts, it's going to open doors. And once you open doors, guys, you're going to see all sorts of opportunities. All right, and Caesar, you said you give up, but you didn't tell me why. Let's talk about it, right? Why do you feel like you got to give up? What's going on? Saying I give up in the classroom is like that 16-year-old girl that just posts, ugh, life is so hard on Facebook, right? And just wants people to pull it out of her. So I'm trying to pull it out of you. All right, Z, I think I got in too quick on that one. Let's see if this will load up real quick. Here's the entry on the first one. Everything agrees, right? Little momentum style, continuation. Wait for every chart to agree. And this just reinforces what John Novak posted in that picture. When every chart agrees with the direction of your trade, guys, your chances go up exponentially. There's no reason to fight. You've got the best software in the world. No reason to fight. Alan. Uh-oh, Alan, did you revise? Yeah, you did. Guys, here's an example. Real world trading plan, right? Alan's trade is using two charts. Good top or bottom, odds favorable. Nice. Isn't that easier, Alan? It says the same thing, right? But it gets rid of all the noise. Good. Great job. Thank you for sharing that. Guys, if you ever want to share your plan with me, if you want me to take a look at it, critique it, pinch it, poke it, break it down, all you got to do is give it to me. We'll talk about it all day long. Guys, everything says up. The market went up, right? Right to a key Fibonacci area. Let's see if crude oil's doing anything right now. It's trying to break out of that range, but oh my gosh, 1, 2, 3, 4, 5, 6, 7, 8. 8 divergence at resistance. I'm not going long. Right? Odds favorable, momentum up. I'm not going short. Guys, just relax. We're going to get there. Market's not giving it away just yet. It's got a case of the Mondays. Here we are, resistance. No trigger lines through. You already have two divergences. Your smalls are on the wrong side of the large. Is it a strong top yet? Let's do a lesson in tops and bottoms. Is this termination condition a strong top, guys? Is this a termination that has created a full reversal? And this is probably a good lesson on the difference between a termination condition, right? Marshall says no, I agree. And a strong top or bottom, a termination condition that creates a full reversal. Big difference between the two. One of them says pump the brakes. It may reverse. The other one says, hey, it's a great top or bottom. The market has reversed, right? Support, everything rolls, market continues up. It may keep going up, but until we clear this key Fibonacci area, there's no reason to hope, right? And guys, the difference between an area that has broken and isn't broken, it's easy to tell. The trigger lines are going to get to the other side. For new users, it's a matter of not forming the opinion yet, right? Either the area has broken or it hasn't, or it's going to become a good top or it won't. And here's kind of a smaller chart example of what's happening right now in the S&P, guys. We've reached resistance. None of the trigger lines have gone through. It's a termination condition. We know that it is, and we're not looking for longs. Some people will form the opinion, and let me get a different color here. Some people will hope resistance holds, guys, and they'll put in a short right here. And that short gets taken out and they get stopped out and they're like, oh, but I had resistance. And I'll see people do this. There's a short, doesn't work. I'm going to try again. I'm going to try again. I'm going to try again, and I'm going to try again. And I've seen people decimate accounts, hoping that an area holds. Guys, this is, I think resistance will hold. Once resistance holds, guys, if it's really going to hold your smaller charts, the triggers are going to roll. The smalls are going to get to the other side. Everything's going to agree for the other direction off of resistance. And very often, this price right here, when you have the information that everything is held, is typically very similar to the price where you're hoping it will hold. It's what you do in the middle. It's that patience piece, staying on the right side of the fight, guys. If this is truly going to be a top, these triggers are going to roll. And there's no reason to try and predict. You don't have to be first. You don't have to predict. Just wait for the advantages. Hey, momentum style trades, right? Odds favorable momentum. The path is clear. Little pullback, little exit, quick chunks, right? It's a little different. It's not a high probability trend trade. What is it? It's taking advantage of momentum. It's taking advantage of a clear path. Small little chunks. Nice job, Timmy. 2 ticks. You already have the divergence. Can we talk about the momentum here, Timmy? If the small triggers are inside of the large triggers, do you really have momentum? Not so much, right? I like this one, but your best look, and let me just show you, and I learned this one from Ron, and I'll admit that I learned stuff from Ron. You get nervous and stopped out. Why do you keep doing this? Because you're too tight. Look at where the bars are, and this is what John Novak calls the momentum phase, and hopefully this helps you. Look at where the bars are here, outside of the small triggers, which are outside of the large triggers. Do you see it? That's your giddy up phase. That's the best of the best look. Here you start getting to the other side, you're losing it, so you have to use Fibonacci. Once you use Fibonacci, you've got to give it a little room, right? At this point, you've used Fibonacci and everything go in the same direction. Up here, you're relying just on momentum. Yeah, does that make sense? So go back and look at it a little bit, and you'll see it right here. See how the bars are outside? And then when they start get back inside, oh, look at how it dances. So when you've got that odds favorable momentum, and you've cleared 94, and you've got that momentum phase, boom, boom, quick chops. Get in, get out. That's how that trade works. And I'm not very good at it. I can recognize it. I could probably teach it. But I can tell you that that's the look that produces results, is making sure that that 5-1 shares that momentum, yeah. And Bobby, you're absolutely right. And Caesar, it takes a minute, right? It takes a minute to understand. You can't be proficient in $1 million endeavor on day one. And it's tough. It's tough to come in, especially if you're accustomed to being successful, right? But going from I'm making a killing to I give up. I just want to make sure you're okay. I'm not even sure you're still in the classroom. Yeah, you are. Talk to me, Caesar. And guys, look at this. It's kind of happening, right? Termination condition. There's multiple divergences, right? Your synthetics are still up really strong. Your large triggers are trying to roll. If this is really going to be a top, guys, we're going to get that full roll. Such a good lesson. A little bit of patience goes an awful long way. Now we have that termination that creates the full reversal. Everything's trying to go up, isn't it? At least we're getting that clear path almost. The large triggers get above 71.90. That path is clear. There we go. It's not the best momentum, but it is a clear path. It is areas inside of favorable large triggers. That would go into that medium probability. What's our one issue? Our one issue is that momentum isn't perfect on the 13-2, but I do have a clear path. I do have a small window of opportunity, and I could have, without divergence, no loss of momentum. If you forfeit one, it may be medium probability. You may say to yourself, in a medium probability scenario with a tiny window of opportunity, I'm willing to take a shot at this area that's broken with the triggers up coming from a good top or bottom, right? But because it's medium probability, it's imperative that it becomes managed aggressively. Stops outside the window of opportunity. No reason to leave 15 ticks of risk, right? You know where it's likely to continue if it's going to continue. If divergence prints and it gives you a second loss of momentum, maybe you handle it a little differently. But you see how this is not the perfect trade, but because we use chart reading, because we can identify clear paths, because we can identify bounce points, you could take these trades and manage them assertively. What do we want to talk about, guys? We're waiting for the market to give us something, right? We don't have a high probability. Can we scroll back? There was one tail. There's a tail and what may be a 50-50. Not that one. This one, right? There's a couple more. As that market's continuing up, trying to break through. Just studying, getting good at recognizing momentum, getting good at recognizing clear paths, identifying termination conditions, areas that may stop the market. Guys, that's all we're doing. Repetition, rinse and repeat, right? Rinse and repeat. Posting those pictures in the room, asking questions. And I want to talk about what Bobby just talked about. Drinking from a fire hose. You guys ever heard that phrase? It's like drinking from a fire hose. When you start Nexgen, guys, when you start Nexgen, you're trying to absorb everything, right? You're trying to be the best trader you could ever be on day one. You're in kindergarten today, guys. It's okay. There's a lot coming at you. But it's brought to you systematically. It's brought to you in a way that says, hey, all you have to know how to do in the beginning is identify momentum, right? Go back and study momentum. Get good at it. And then add termination conditions. And you can go back and study termination conditions, and it doesn't become too terribly difficult. How do I identify a termination condition? Well, it's an easy process. Price reaches an area if the trigger lines don't go through. Textbook. So you begin to recognize termination conditions. You begin to recognize odds favorable momentum, and you start putting yourself in a position to where you get to practice your entry areas one at a time. Simplicity. Build a foundation. Work the direction. Can't stress this enough. Has anyone other than me tried to catch everything instead of the best? Tried to chase every trade, hit every top, every bottom? Take a lot of iffy trades because you hope that they work? I've done it, guys. I'm not afraid to admit it. That's one of the reasons why I love teaching this class. Because I've made every mistake you guys will ever make. And I've probably made it twice. Shogun, I would love to. Let's talk about the gap theory. And then let's go back and scroll back and use historical to study it. So what's the gap theory? If price pulls away from the synthetic triggers too fast, too far, what are the synthetic triggers, guys? Let's define that. The 13-2 large triggers. This is a phenomenon that we're looking at on the 13-2 chart. Let's be clear about that first. It's the same phenomenon that'll get you those great entries on the 5-1, but we're using it. Nope, I'm using it, Shogun. I'm just looking at a 13-2. I'm not confusing it. I'm not over-complicating it. I'm looking at the 13-2 chart. All it says is that if price snaps away from those large triggers, it's likely to snap back when you run into an area. So let's look at a couple examples. Price comes all the way down to Fibonacci support, all the way down to the mid-band. There's room for a full bar to be created before it would get back to those large triggers, guys. This is the gap theory. All this says is don't take any shorts in between the bottom of this price bar and the connection to the large triggers, because price is likely to snap back. Price comes all the way to resistance. And then Shogun, this is how we use the 13-2. Do you see where the reversal bar marker is? That white bar that lets you know where this bar becomes a down bar? If your trigger lines are below it, the gap theory is in play, right? It's that distance, that full bar, lets me know that it's likely to close that gap. That's all it is. Price reaches resistance. Large triggers remain below the reversal bar marker. Don't go long, guys. You're likely to get run over. Price reaches the mid-band. Large triggers remain above the reversal bar marker. Not looking for any shorts in here. They're likely to get run over. Does that make sense, Shogun? It's really pretty simple. And watch how often it happens. Oh, look at this. Triggers are rolling. If it's really going to be a top, everything's going to roll. I love that. Patterns, guys. Patterns make the world go round. So here we go, Shogun. Price pulls all the way back to the mid-band, right? Look at those large triggers. They never even blink. They don't turn. No short trades. Price is likely to close the gap, and it does. And if I scroll back more, price reaches resistance. The large triggers don't follow. Look how it closes the gap back to the large triggers. And Shogun, do you want to see something cool? On the ES, price reaches perfect. Price reaches support. Those large triggers are all the way up at the reversal bar marker. You got it. But do you want to see something cool, guys? This is how often you're going to see this to the point to where you'll recognize it. Is Shogun, you'll get to the point where you'll start saying there was some form of resistance right here, because look at the gap theory happening. You don't even need fibs. There was probably some form of support right here, and price snap back to the triggers. And there was probably some form of resistance, maybe a mid-band right here, because price snapped back. So check it out. Those circles that we did, resistance, mid-band, and one-to-ones. Straight to one-to-ones. There's that resistance. Isn't that pretty cool? Guys, that's what the gap theory does. If nothing else, it helps keep you safe. It helps keep you out of a position of getting stuck as price closes that gap. Did that help, Shogun? And that was great recognition here. Large triggers are above the reversal bar marker. Anything in this area. It's not guaranteed, but you're likely to get run over as it closes the gap. Unless it clears path and gap doesn't apply, no. Gap always applies. If you hit an area, gap applies. If you have a clear path and those large triggers are still so far away, something's a little weird. Something weird is going on, right? I don't have a 21-3. I keep it simple on 2 charts. What the gap theory says is that if I'm trying to go short here and the large triggers are all the way up here, the likelihood of me getting run over goes up exponentially. That's all it is. And we're heading to the blue fib, right? So do you remember this lesson? Were you here for this one, Shogun? In order for this blue fib to be a termination condition, what's the first thing that has to happen, guys? Do you remember the recipe? Somebody help me out. In order for this blue fib to be a termination condition, what's imperative that it happens? Price reaches. Amen, Marshall. So if price hasn't reached Fibonacci support here, it's a target. Man, this is a target, not a termination condition, right? If my rules are met for a short somewhere, this becomes a target. When price reaches it, then it becomes a termination condition. And look at that. I even have a slide for that one. In order to decide if an area is a target or a termination condition, guys, a target or a termination, price reaches, no triggers break. A target, price has not yet reached the area. A lot of people skip an awful lot of trades when price hasn't reached the area yet, right? So that becomes a target. And until price reaches it, it will remain a target, not a termination condition. Check it out, guys. Isn't this the same look? If you went short hoping resistance holds, look at all the nonsense. And now everything agrees. And now we have a strong top. We have a termination condition that creates a full reversal. That full reversal gives us odds favorable momentum. That odds favorable momentum, we're close to a fib. We haven't quite reached it. And there's the pullback to your synthetics at 08. Right? We're just piecing it all together, waiting for those advantages, looking for the best of the best. 50-50 trade on crude oil. Not a good top, not a termination condition that creates a full reversal, right? Market pushes all the way down to support. Smalls break through, but the large don't. Guys, do you notice that 69 isn't broken either? There's two areas that haven't yet broken. There's a loss of momentum on the 5-1 that is a tiny little window of opportunity. If you're embracing simplicity and advantages 100% wholeheartedly right now, and you're looking at that super simple plan, and you're asking yourself, 50-50 trade, odds favorable momentum? Absolutely, we have it. Smalls outside of the large, we have it. Up, we don't have a clear, right? There is divergence on the 5-1. There is not a good top or bottom. That's two no's on a medium probability trade. Some of you will take it. Some of you will say, you know what? I choose not to take it because of the divergence, because it's not a good top. Both are okay. I don't have an opinion about either, guys. One doesn't strip you of any more advantages. One simply says, you know what? If the path isn't clear and divergence is present, I'm just not comfortable. Either one's okay, but the only way to understand whether or not this is your trade is, guys, you have to have a history of it. You have to go back and you have to look. When divergence prints on the 5-1, do I win more than I lose? When I'm not coming from a good top, do I win more than I lose, guys? And that's all you're doing. What we've done in classroom so far is nothing more than one small bite of the elephant, right? Focusing on the absolute best of the best. Focusing on the most amazing advantages, creating the highest probability trend trade. Very few of you are going to stay in this spot, guys. Human nature says that you've got to do more. There's got to be more trades. There's got to be more trades. The reality is there doesn't have to be more trades. There can simply be more contracts. Let that sink in for a second. Doesn't have to be more trades. This $300 trade on a 2-lot, guys, is a $600 trade on a 4-lot, is a $1,200 trade on an 8-lot, right? I don't need more trades. I don't need to work myself to death every day. I just need to be patient. Wait for the best, right? Wait for the best of the best. Guys, if I make $100 on a 1-lot, that same trade, doing nothing more than turning it into a 10-lot, is $1,000. There was a gentleman that traded Nexgen. He'd been with us for a long time, and he would take, and I want to say it was $100 on every trade. That was his goal, waiting for the perfect conditions, $100, but he did it on a 100-lot. So every time he pulled the trigger and won, he made $10,000 on 1 point. 10 ticks. That's it. He waited for the absolute strongest triggers. He waited for the absolute clearest path. There was nothing in the way, no losses of momentum. And the rumor is that this gentleman just retired. He made more money than he could ever spend, and he just stopped trading, and now he's just, I don't know, playing golf or something. But it's an interesting concept. Better trades, not more trades. More contracts, not more trades. And guys, look at this, 50-50 with divergence. If you did get in, it gave you a management opportunity, didn't it? There's that second divergence on a 50-50. Not from a good top. I didn't know this would happen, but I knew that it was probable because of the conditions, because of the patterns, because of the study, because of how many times I posted this picture in the room getting stopped out and had John Novak, who was my mentor, when I was trading. Whoops, they just kicked me out of the room, guys. I'll be right back. I had John Novak telling me, hey, Mark, it's a 50-50. There's divergence. It's not a good top. You're giving away a lot of advantages. Why are you doing that? I needed that feedback. I needed to hear that every day from somebody that could read the indicators better than me. And it made me a better trader, guys. And that's how we use this classroom. Take pictures, ask questions, recognize advantages. Are we back now, guys? Can you hear me? Okay. Yeah, they kicked me out for a second. They like to remind me who's boss. So who took the 50-50, guys? Let's talk about it. Who took that medium probability trade? And if you took it, how was your management? Did you get out quick profits, no loss? Did you hold it and hope? Bobby says, nope, but let me show you that high probability trend trade again, Mark. Why on earth would I chase lower probability 50-50s? And guys, look at that checklist. Yes, 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 yes. No, that's okay. I love seeing this one again. You know what the truth is, Bobby, is this is such an amazing trade. I'm putting it in my spreadsheet. I'm going to come back and learn how to do what you do. Perfect. High probability trend trade long. Don't miss these. Bobby, 50-50 with divergence. You get in at the area. You take quick profits. You give one tick back. Man, what a great trade. Great management. In at 65, $100. That's a $90 trade on a medium probability, guys. 90 bucks. Everyone's like, man, but that's just $90, Mark. Shoot, do that 5 times a day. That's $450, isn't it? Take that manage out of trade every time, right? 90 bucks a trade, guys. 5 times a day. That's $2,300 week. Shogun, who's we? You and the mouse in your pocket are waiting for a clear path on the ES. Shogun, do me a favor. Take a picture. Tell me what you see. Because I'm not going to sit next to you, right? There is no we. Go to the S&P. Take a picture. Guys, this is how. Tell me what you see right now. You annotate a chart and I'll annotate a chart. I see smalls through an area. I see 1, 2, 3 areas not broken, right? What else do I see in the moment? I see a tiny little window of opportunity. And it doesn't look like I have divergence potential. Oh, and I also see a good top. So I have to go to my trading plan. What does my trading plan say about a 50-50? My trading plan may not be your trading plan, guys. My trading plan says I need odds favorable momentum. I've got that. I need smalls outside of the large on the 5-1. I've got that. No divergence on the 5-1. We'll see, right? I don't know yet. Enter from a good top or bottom. I've got that too. And it says divergence prints, no trade. Shogun, it looks to me like that fit my rules. But it means that I have to identify my first trouble spot and get to break even as quick as possible. I need to reduce risk, because if it goes beyond this window of opportunity, it's no longer my trade, right? Because it's medium probability. That's a lot of areas that haven't broken. But it is a great top. It is odds favorable momentum. It is no divergence and strong triggers and a tiny little window of opportunity. I have to identify my first trouble spot, right? That's the area that hasn't broken. That's not a lot of profit potential to get to that first area. And I'm not waiting for a reversal bar, because this is an assertive trade that requires assertive management. It's medium probability. It's not a high probability trade. High probability trade comes from the other side. And that's why we manage assertively. Whoops, what did I do? Does that make sense? 1, 2, 3 areas not broken. Tiny window of opportunity, no way am I leaving a lot of risk on that trade. Guys, this probably isn't a trade because of 1, 2, 3 areas not broken. That's a lot. That's 3 issues, isn't it? I was trying to give the example of you got to go through and you've got to read your plan and you have to make a decision. And maybe after a couple of these, I say 50-50, one area not broken. What do you think about that? Isn't that pretty cool? It's one thing to have one area with the potential to break. It's another thing to have 3 areas that haven't yet broken. And it may still go down. But guys, the market's a fight. Did you see how quickly it reacted? That's the market reacting to Fibonacci, guys. And this is why we focus on the best of the best, the highest probability. Man, give yourself a month. Give yourself a month of not giving away advantages and see how it works out for you. I've never had anybody in the history of the high probability trend trade checklist follow this for a week and not do better than 70%. Ever. Ever. Yet we all feel compelled to chase more over and over. It's an interesting phenomenon. I'm sure there's some sort of psychology part to it. Look at that. Crude oil on the same look, right? 50-50 with divergence. Not from a good top. I think we even talked about that one. Good stuff. Guys, I'm going to take a minute. I'm going to reload my water real quick. Last hour, I want it to be for you guys. I want you to talk about the things that you want to talk about. I want you to ask questions on the things that you need help with. Tell me what we're talking about. Conrad, give me a two chart picture of it. I love bingo. Keep getting them bingos. Show me how you did it. I'll be back in about 5, guys. my friend. Dun, dun, dun. I like it. So let's look. And I'm going to read what you said. And I'm going to annotate your chart as well. And guys, I want you to know this is a different market. These are different time frames, but the looks are the same, aren't they? So Conrad, everything's said down, right? Don't have odds favorable momentum, but you've got small triggers down. You've got large triggers down. Your trend is down. Your path is clear. Everything on your large chart says the market's likely to continue. I love it. And then you just came back and you refined. You said, I've got an area inside of those large triggers for an entry. You got in, and then you got out on the first up bar. No worries. Pretty good look, I think. Everything said down, every chart agree. You were able to get in, you were able to get out, make some money. Not a lot of fibs on your 13.2 coming through. Not a lot of fibs here, so it's a little tougher to create those targets, right? So this is where you have to have those presets in. Looking to take a little bit, and then when divergence prints, that market just screamed up. And then hopefully somewhere, whoops, around here, you had an opportunity for a long. Did this set up for you? Were you able to take it the other direction? Because that's your best look, isn't it? That's that odds favorable momentum. That's no termination conditions. Oh, no worries. Keep using it. Keep practicing. Oh, and there it is right there. Pulled right back to the mid band. Came up and retested that resistance. So see how that works? Odds favorable. There's that tail. There's that potential entry. Could have used that same idea and catch that trade to the long side. Nice job. Guys, everything that we teach, every chart, every time frame, right? It works. You just have to learn the patterns. 50-50 didn't work out. And now we're going the other way, and now we're looking at a termination condition at 21. That same area that held before is holding once again. Let's talk about the path again. And I think this is so important. This PDF file came about one day. John Novak and I were sitting around and we're talking. I think it was a Sunday morning. We were both kind of having our coffee, getting the day going. And we're like, how do we make this easy? How do we make this so simple for people? How do we keep them focused on the best of the best? How do we get people in a position where they're making that money, or at least have the potential to make that money? And it goes back to the same recipe that's been going on forever, guys. To minimize your learning curve, you've got to post pictures in class, right? You've got to post your trades, every trade, win, lose, or draw. Most people want to hide losers. They want to show me the winners because it feels good. Guys, the losers are where you're going to learn. The losers are where that great information is. The losers are where we're going to recognize patterns. Everybody has a thing, right? My thing was trading into termination conditions. If there was a way to trade into a termination condition, I would find it. And it cost me a lot of money doing it. And it wasn't until I started embracing this exact same path, posting in John Novak's educational room. Hey, John, what happened here? He's like, dude, you're trading into termination conditions. You got to stop this. It's taking your money. And eventually, I fixed the habit. And if you're trading, if you win and the rules are wrong, you may have a short-term victory, but maybe a long-term failure, right? Getting lucky. Getting lucky is a rough plan. How are you going to know the difference? Guys, to be sure, you need feedback from us, and we're here to help. If you place a trade on the simulator, you participate in class, there's no risk of loss or capital. Right, D? There's no risk of loss or capital. You're on that simulator. Embrace it. You need someone to tell you what you did right or wrong when you're new. Guys, I will give you feedback on entries. I'll give you feedback on exits. We can talk about management strategies. We can embrace your plan. We can do anything that you need done to get you comfortable. That's what we do here. That's what Nexgen is for. If you're on a demo, you're not going to be a professional day trader at the end of your demo, but what you are going to realize is that you have 15 hours live every week. You're going to get feedback on every trade that you take, every decision you make, every chart read that you have. And guys, it's that information that's so valuable to what we do. You're going to have every resource to identify advantages, to recognize disadvantages. You're going to have everything that you need. And then it's just up to you to work through it, right? To keep practicing every day. And that's it. You will learn that the software works, guys. The software is an elliptical. That's how you got to look at it. The elliptical only works if you work it, if you learn how to use it, if you get on it, right? Every diet known to man, it seems, will help you lose weight right up until you stop using that diet, right up until you stop following the plan, guys. So use this outline for education, that same one, that path to getting you to where you need to be. Populate your spreadsheet using a checklist. Guys, there's that checklist for the high probability trend trade. Every trade that you take should follow this checklist for their first 20 days, right? Don't deviate. Let it be simple. Embrace the simplicity. Post your trades in class with your entries and exits, along with the rules annotated or copy-pasted on the chart. If you have Snagit, you can just take a checklist and copy-paste it right onto your chart. You can actually click and drag it right onto the chart. Let me see if I have my checklist. I don't, but I will in just a second. Let me show you how easy this is if you have Snagit. Guys, look at that count on pictures. That's 5 months worth of pictures. That's it. Only 5 months. 4,500 pictures. So if I'm looking at Conrad's chart, guys, I can take this, boom, and drop it right in, and I can double check and make sure that everything he's doing fits the rules that he told me that he wanted to follow, right? It's that accountability piece. Study your historical chart setups. Use the pictures generated in the live class. Grab them from Discord. Create at least 15 images a day, guys. 15 images a day is 300 images in your first 30 days with Nexgen. By the end of 90 days of study, you're at almost 1,000 pictures, guys. And once you create the habit of taking pictures before you enter the trade to make sure that the rules are met, taking pictures while you're in the trade, working on your management, talking to yourself, saying nothing has changed, don't move stops, don't exit this trade, right? After the trade, take a picture, show your exit. Does it make sense? If you need to work on management. And then guys, I think one of the most important pictures that you can take is a picture when your rules are not met. Maybe there's a termination condition. Maybe there's not strong triggers. Maybe it's a 50-50 with a couple divergences, but reinforcing that you are in fact a rules-following, rules-based trader. Take those pictures, guys. You're gonna grow fast the more pictures you take. Present the pictures in class annotated, right, with your checklist, preferably copy-paste. 15 hours a week, Monday through Friday, you're going to get feedback on your ability to follow your checklist. And then once again, because it's so important, there's that picture again, guys, how to annotate over and over. So important to annotate your charts. Let me know what you're doing. You're going to insert the trades that follow the rules onto your spreadsheet. They must be studied and memorized until executing the correct entries becomes second nature. Over 200 pictures. Maybe. Is that right? Is my math right? I don't know. It's a lot of pictures. Yeah, because it's for over 200 pictures of entries, guys. That's how entries become easy. Define your management plan, right? We talked about entries. Now you're going to manage initially a mechanical approach that eliminates emotion or opinion, tends to be the most straightforward way for new users. You can alter your plan when you're done with the education. You can alter the plan when you learn to read your charts. So guys, if you're trading 2 contracts, there's that initial stop. There's pictures of that management plan in place. Allow yourself 30 to 90 days. Guys, this is the one. Allow yourself a minimum of 30 to 90 days to practice the mechanical approach to a checklist-based entry and a $100 to $200 automated exit. You can adjust your target based on your experience later. Super reaction. And guys, once you establish this plan, right? Once you're like, man, I'm nailing my entries, I'm mechanical, I'm pragmatic, I don't get anxious anymore, my palms don't get sweaty. It's time. It's time for me to go live. I'm going to put all my hard-earned money into this market, and I'm going to be a bazillionaire. Well, this is what gets us, right? Accept that you may be less capable of a trader than you initially believe your first time out. You're going to learn things about yourself the first time you go live. Everyone feels entitled to win. Guys, this right here came from a conversation that I had with John. When I told him, I said, I felt like I should win because my last name is Novak, not because I did the study, not because I was confident or capable, but because I just felt entitled to win. And I didn't. Guys, I avoided the path the first time I went out. I lost $5,000 in 22 trades. Not one winner. So before risking your capital, test your trading plan using a prop firm. Guys, other people's money. They run sales all the time. Apex is doing 80% off right now. For $34, you can trade up to $50,000 worth of capital, guys. You can control $1 million worth of capital for $600, and you get to keep 90% of it. You get to keep the first $25,000, but first you have to pass their test, right? You have to go in there. You have to be able to execute. You have to be able to manage your money. You have to be consistent. And you can't blow out an account. But if you blow out their account, it's $80 to reset it. It's not the $5,000 that you normally have. You can add more funded accounts, guys. So starting out, use their money. You're going to thank us later when you realize what you don't know about yourself yet when you're trading live money. Some people completely abandon their plans when they go live, right? They will take nothing but high probability trend trades. They will manage conservatively. They will be 100% consistent, and then they're going to go to this Apex account, and they're going to just try and chase everything. They're going to abandon the process and focus on the money. It happens. It's human nature. It's okay. But when you can make money in a real-world setting with someone else's money, then trade your own money with their funded accounts, right? Remember, there's no penalty for being cautious when you start trading live. The actual harm comes from thinking you're a better trader than you are and blowing out a large sum of capital. Guys, this is the absolute easiest way to get to where you want to be. I mean, this is the path of least resistance, 100%. It has been proven over and over and over. The only thing you have to do is commit, right? I commit to this path. I commit to the easy path, the path of least resistance. And then it's just a matter of waiting for advantages. And sometimes they're going to present themselves and you're going to take 15 trades in a day, and sometimes there won't be any at all. And you're going to sit on your hands and you're going to be like, oh my gosh, I wonder if I missed something. I wonder if in all of this nonsense, I missed out on a trade. And guys, that's where you can go back and you can circle tails with odds favorable momentum and no termination conditions and decide whether or not you did miss a trade. How many times did it happen today? We'll start at 2 a.m. Terminations, right? And there's a 50-50. And everything goes up, termination, not odds favorable. It may need a little coffee. It's Monday, right? No shorts here because of the gap theory. This right here is a 50-50, and the second one on the divergence high is not. So there's our second opportunity. 50-50 opportunity. Guys, this was the perfect trade that hopefully a lot of you guys caught. And then as we come through and we look at what's going on, guys, there just isn't. Opportunities, not the way that we want them to be, right? And since there's not, in the last 8 hours, in the last 9 hours, you've really had 4 opportunities to potentially make money. And then if you want to see if they really were opportunities, you go back to that first circle. Guys, you should do this every day. When you're done trading, go back and look. Did I miss something? Did I catch everything that could have made me money? Did I skip a trade where the rules were met? Hopefully every one of you caught this one. That's a good one. That's an opportunity, guys. That's 300 if you're following rules. And then here comes that 50-50 trade. No divergence, but it doesn't make it to the areas inside of favorable large triggers. It doesn't fit the rules. I'm not going to count that. And then if I scroll back a little bit further, there's a 50-50 trade, guys. It's a beautiful entry, but it had one divergence. If that's in your plan, cool, you made 300. If it's not, you sat on your hands. And then you come all the way back. And that one didn't make it. Some days the market is like an ATM. Some days you have to sit on your hands. But guys, if you had to work for a total of, I don't know, 7 minutes clicking, $300 isn't a bad morning. Market's only been open for 3 hours, right? And now you're just waiting for those advantages, guys. You're developing this patience to where you sit on your hands and you just wait. Let's play if then. If small triggers break through the area, if large triggers are strong, if I have odds favorable momentum, if there's no divergence and I get a small window of opportunity, maybe I'll look for that breakout, right? But until that happens, I'm going to sit on my hands. Same thing here, right? If I get odds favorable momentum, if the conditions are perfect, then I look for a trade. Does that make sense? Guys, the most difficult part of being a day trader, you ready? I'm going to tell you right now, is doing nothing when there is nothing to do. The hardest part about being a day trader is sitting on your hands when the advantages aren't present. And what you'll find is that the better you get at that, the easier trading becomes. The other thing, I'm going to share this. These are little excerpts from Mark Douglas. When you stop expecting to win every trade, because remember we said that we're looking for a trade that wins 70 to 80% of the time, right? Guys, when you stop expecting to win every trade, you're going to start winning more trades because you're not going to let your emotions take over. When you stop worrying about the result and care about your execution of the method, you're going to find that you're winning more trades, because if you're focused on the execution, on the rules following, you're focusing on entering a trade when those advantages are present. It takes time to learn them, guys. It takes time to build trust, right? Don't get caught up in ticks. Absolutely. Well, Shogun, if there's nothing, the tendency to give back profits on a good day is soon to follow. It's not soon to follow. You're manifesting a destiny that doesn't have to be true, right? So let's rephrase that. When there's nothing to do, but I do something anyway, then typically I'll give back those profits. Has anyone ever done that? Had a great day, you're up $1,000, feeling invincible, so you start breaking your rules and you give it all back? Done it. We've all done it because we're all human. It's no different than going to Vegas, right? You start losing, you start getting scared, so you start doubling up, hoping hoping that you win. Guys, the advantages are easy, aren't they? You either have a termination condition or you don't. That's it. You either have a clear path or you don't. You either have odds favorable or you don't. There's not a lot of wiggle room for the brand new user. You're going to learn to read charts, right? You're going to learn to recognize these advantages. You're going to understand where the market is likely to go, where it's likely to stop. You're going to have to learn to resist the temptation to trade your read rather than your rules, right? Well, the background's green, I'm going long. Never mind that there's a big fat red line and none of the trigger lines have gone through it. And guys, it's the repetition that builds that trust. When you see something 100 times, it makes it easier. When you see it 500 times, it makes it easier. I promise you, if you go through this checklist and you just click on them, look at that. It's perfect. Look at that. It's perfect. How many of these do you need to see before you believe it, right? How many of these do you need to see before you'll take it automatically? And I love this picture. This looks exactly like the trading crude today, doesn't it? Termination creates a full reversal, gives odds favorable. There's your pullback, and this is perfect. And guys, remember we said you're going to understand where the market's likely to go. You're going to be able to use Fibonacci to get to that area. And look at that, weakening triggers, beautiful exit, right? Perfect, 39.78 to the tick. You're going to learn not to give back 5 points of profit because you're going to learn to respect and understand termination conditions. What a great picture. Trust for entries, and then ultimately you'll develop trust for exits as well, guys. That's the goal. And I don't care how long you've been with Nexgen. Got users in here that have been with Nexgen for years. And they still ask for help, and I think that's great because if you need help and you ask for it, you're going to get it, always. I've got users in here that are brand new and that are working through these feelings of, oh, there's so much to learn. There's not. There's things to learn, but if you embrace the idea that you're brand new, and rather than trying to learn everything, you try to learn one thing at a time, right? How long did it take you to learn momentum? Guys, it took me about 5 seconds. If the scissors are open, I've got it, right? How long did it take you to learn termination conditions? Well, that one took a little more because sometimes my brain would start playing these games with me. Well, it's kind of, but not quite, so maybe, so if, possibly, could I, maybe, right? But then you just simplify again. If price reaches an area and the triggers remain above it, it's a termination condition. Don't add little things to it. Well, but the trigger line color. Well, but the sun came up in the west today. Well, you know, keep it simple, guys. Keep it simple, keep it focused. And then once you get good at those termination conditions, guys, this is your first week, easily. By the end of your second week, you'll be nailing entries. You'll be making mistakes too, but you'll be nailing entries, getting the absolute best of the best. And I honestly, wholeheartedly believe that within 10 days, you've put yourself in a position to win more than you lose if you just follow the plan. My job is to help you understand the plan, to help you read the plan, to help you get the advantages, to help you read your indicators to become a chart reader. The only way that works is if you post in the room. And I feel way too soapboxy right now, guys. 50-50 trade, right? Smalls above, large below. I've already had one divergence, and I'm at a pivot stop out. And I have divergence potential. That's what your live market is doing right now. 42.11.15 has not broken. 42.07 has not broken. It has the potential to with odds favorable momentum. My 5-1 chart has shown me divergence twice. I don't know what's going to happen. I'm not in control. I have to ask myself, are there enough advantages for me to enter the market? Or have I given away enough advantages through multiple divergences in areas that aren't broken that I prefer to sit on my hands and not hope? If you haven't taken a trade in an hour, you're more likely to take a lower probability trade. Pull your checklist out. Stare at it. Look at it. Hey, good morning, Jay. Mark, you say we use a 13.2 and a 5.1 to do trend trades, correct? Absolutely. Please notice on the 13.2 that the momentum is great. We come from a strong bottom, no termination conditions, odds favorable, area for entry, but the 21.3, there's a fib as a termination condition that we wouldn't see unless we have it open. So do we just go in and place our entry at the fib on the 5.1? Great question. So let's see if we can do this with two charts. So Jay Solar, you had a 50-50 down here, right? Your small triggers broke through, but your large triggers did not. Let's look at where we're coming from. So if the small triggers go through, we don't really have a good bottom. This isn't the best of the best. When I talk about a good bottom, when we talk about that best look, trigger lines don't break. Trigger lines don't break on a really strong bottom. This is a good termination condition, right? Ultimately, it ends up that way. But what's the next thing that we see, Jay Solar? We see a 50-50. The large are below, the smalls are above, right? So this area has the potential to break, but it hasn't broken. You've already had a divergence. You're at a pivot stop out. So this is a 50-50 with divergence. You have to make a decision if that's your trade. Your 21.3 fib appears to be a 5.1 fib. So one thing that you've done is you've got, and it looks like there's a 5.1 fib up at 14. And I'm trying to see where that one's at. That's probably at 12. Right there, 12, 17, we've got an influx, we've got an influx. But you're not running synthetics over here, or maybe you are. There should be an 07. I'm trying to work out your plan. So on my 21.3, and let me do it this way, Jay Solar. I'm trying to, I want to word this correctly because when you say correct with a question mark, that's you saying, yeah, but, which is totally cool. I encourage you guys to do that. 50-50 trade with divergence. That's the first thing that I see, is a 50-50 trade with divergence, right? So on two charts, Jay Solar, does that fit your plan? If it does, cool. Your 21.3 fib isn't native to the 21.3 here. And this is why I use the 13.2. So it doesn't fit your plan. And that's okay. But when you're looking at the 21, so what happens is you're giving yourself more to look at, right? You're giving yourself more options. More options to decide, maybe I take the trade, maybe I don't take the trade. One of the reasons that I use the 13.2, Jay, is because on the 13.2, you're going to see your 21.3 areas, you're going to see your 5.1 areas, and you're going to see your 13.2 areas. So your 21.3 areas come up as the fat lines that don't extend all the way to the right. Your 5.1 areas are the skinny lines that don't extend all the way to the right. And your 13.2s are going to extend all the way to the right. So if I have these three on my 13.2, and if you look at your 13.2, you're running synthetics on a 21.3. You're giving yourself a lot of information. On the 13.2, there is your 5.1. There's your 21.3 area up here at 17. You see it, right? And there's your 13.2 native. So what you're looking at is too much information. Not only are you running a 23 with the 21.3 fibs, but you're also running a 21.3 with synthetic fibs from every other time frame. And you're just, man, it's too many cooks spoiling the broth there. Does that make sense? Because if you took the synthetics off and you only ran your 21.3, you'd see that your 21.3 is up here at 17.24. And you see that on your 13.2, right? You can use that good area. I'm not sure what time frame this one's coming from. 16, 15, 14, 14. That looks like a 5.1. So you can get the same information in 2. Does that make sense? Did that help? I think. I hope. And if I go to my chart right here, there's that 21 fib, right? I don't need it. Yeah, because I've got all of those. See how I've got my 5.1? I've got my 13.2, and it coincides with the 21. And there's a 21, and there's a native 13, and there's a 5.1. So I can see all that on the 13.2. Jay Solar, what I've found for me, and I'm not saying that this would happen for you, is the more charts that I give myself, especially when I'm working on consistency, the more likely I am to skip a trade because I'm a little fearful, and I can find that fear on a chart. But more importantly for me, I'm more likely to take a trade because I'll ignore the chart that doesn't get me in the market and I'll embrace the chart that does. And that's my brain. So for me, we're looking at this 50-50, right? Small's above, large aren't. This area is not broken. This area is not broken. We've had 2 divergences. I got everything I need. Oh, you're welcome. Great question. Because I promise you are not the only person that had that question. So thank you. And guys, this is one of the best things about this class is I'll talk about anything, but I don't always know what to talk about, right? Let's see. Crude oil, termination, creates a full reversal, creates odds favorable, and those smalls are working, right? But they're not there yet. It's a perfect entry point, but 71.18 hasn't broken yet, Bobby. And I didn't see an order placed there. You passed our crude. Oh, okay, that was this one right here. Yeah, and after the fact, it sure looks nice, doesn't it? After the fact, it looks amazing. Yours looks a lot closer than mine looks like it might have been. You've got that 21 right there. Yeah, we've got the same look. It looks better after the fact. So here's the hard part, right? Is regretting it. Feeling like, man, I missed out. And then making a bad decision because of it. You did have that good termination condition helping it out. You had no divergence. You had strong triggers. You had a pretty big window, though, on an area that hadn't broken yet. So there's more coming. I find that one of my biggest challenges is that fear of missing out, making you create decisions maybe that aren't as advantageous. Well, I missed this one, so now I'm going to hope that this one breaks resistance or something like that. Guys, look at that termination to the tick. To the tick. If nothing else, if you're brand new, and you're not absolutely freaking blown away by these Fibonacci areas, my gosh, send me an email and tell me why not. On their own, they're great, right? But then when you couple it, look at that visual loss of momentum, the visual loss of momentum at a key area. And look how the market reacts. You have everything you need to be successful. You just have to practice a little bit. Learn how to extract that success from a market. And man, there's a fight going on here, isn't there? That's a 21.3 fib. That's a 13.2 fib. It's a 50-50 with multiple divergences. It's a tough look. Some of you were long at 08.25 at a pivot stop out. Michael Block in the golf tournament over the weekend? No, I didn't. Man, I didn't get to watch any golf. I worked Saturday. I had a blast working Saturday. And then we drove up to Eastern Washington yesterday. So my wife signed a contract. We are in the Tri-Cities area, Kennewick, Richland, Pasco. So she's going to be the director of a hospital here. So we're going to spend a little time here. We just wanted to come check it out. It's beautiful here. It's nice. Rolling hills. Really windy. It's going to kill my golf game. I'll have to Google Michael Block, though. I don't even know the name. No, we haven't moved yet. We're only here we're going back to where we are. We're south of Portland until the end of June. And then next contract is here. We'll probably hang out here till December and then go back and spend Christmas with our boys in Austin, maybe work in Austin for a little bit. Guys, this is what day trading lets you do too. I can do what I do anywhere. My wife takes a contract. Guys, I'm sitting in a hotel room right now teaching this class. How cool is that? Not broken, right? Not broken. Divergence, divergence. Look at that, right through the mid band. I don't know if it's going to break through there or not. Really? Didn't go pro because he wanted a steady paycheck and finished in the top 15. That's amazing. Telling you, golf is like a fight, right? Anybody can win. I love that. I love stories like that. That's a good story. Cinderella story. That's why I like golf so much. One day, man, I can feel like Tiger Woods, and the next day I can feel like a chunk of wood. Consistency. It's tough. It's tough. Guys, we got a few more minutes. What do you want to talk about? Does anybody want to pretend to be surprised that a 50-50 with multiple divergences didn't work out? Conrad, you and your bingos, brother. Large chart, trend down. Large triggers open, small triggers open. Everything says down. Whoops. Let's see what your 5-1 said. You got in at 13.19 all the way up here, so no termination conditions. And you took a pullback right there to the mid-band and resistance right there at the large triggers and took it down. Got out early, 6-point stop because of early entry. You played scared, that's okay. Short, exit, 3.5. So Conrad, the next part, man, great trade by the way. And let me tell you guys, notice how it started with momentum. You see that 13,897? 13,897. That's your target. You can use Fibonacci for targets too. And with all that momentum, Conrad, ultimately it becomes pretty easy to hold. That's okay. That's normal. You'll develop trust. Ziba, he's not looking at a 13.2 and a 5.1. He's looking at a 34.5 and a 13.2. He's entering on a 13.2 chart based on what the 34 says, exactly the way we enter on a 5.1 chart because of what the 13.2 says. So the look's going to be a little bit different, but he's pulling back to that mid band, pulling back to areas. And then, Conrad, you can use those fibs with all that momentum, and it becomes a great target spot. He's only got one trigger on the 13.2. I suppose he could take the synthetics, right? So D, man, I feel like I used to say this every day. Maybe I don't say it enough. What I teach every day in this classroom, D, it works on any time frame. It works on any market. It works on anyone. Day one to day. You will. You'll learn the rest. Conrad, NASDAQ is a freaking hard market to learn on. So D, here's your answer. NASDAQ is a colossal pain in the ass. I firmly believe that. If you are not so solid on your plan, on your rules, on your looks, if you don't have it in place, NASDAQ will chew you up and spit you out. It's bipolar on crack on a good day, Conrad. But the reality is, if you're patient, and let's talk about what Conrad has here. Every chart says down with momentum, right? Everything says down with momentum, and Conrad took the pullback. Does that sound familiar? Every chart said down. Every chart had momentum. The smaller chart had an area at the large triggers for entry. Guys, the patterns are the same. D, you can look at NASDAQ all day long if you want. It stems back to you've got to know your rules, right? You got to know your rules. And the checklist that I use on a 13.2 and a 5.1, it works because the patterns work. Guys, you're not learning markets, you're learning patterns. You're not learning time frames, you're learning patterns. And once you recognize the patterns, and then once you recognize the advantages that the patterns provide, I don't care where you do it, but write your rules on the chart, right? Tell me why you did what you did. Conrad told me exactly why he did what he did. He didn't use my terminology, but his terminology makes sense. The trend is down. Large triggers open, small triggers open. Trend is down, strong triggers. And then Conrad, get used to looking for the termination conditions, right? And then you took a pull back to the area. Beautiful. And then you can use Fibonacci. So D, can you trade NASDAQ? Absolutely. Man, make sure you're solid in your plan. My brain doesn't work well on NASDAQ. It moves too fast. I don't care for it. But that's just me. Grandpa always said if we all like the same stuff, you know. Paul, you say 50-50 on the ES. Signal would have gotten you paid. You got a signal from 06, he said? Or did you get a signal from down here at the midband? Show me a picture. So you could do it. How did you know to get in beyond all the areas on the 5-1? 07, were we hoping the midband held? Or is it divergence from a bad top and the midband's the first target? and you lined it up over here. As long as you have reasons, guys, know why you're doing what you do. And if you got in, as Paul suggested, Paul, what happens if you get another divergence? Is it a management opportunity? Did you already get paid? Are you already break even? Right? Having a plan, man. That's all I say. Have a plan. Know your plan. Be able to write your plan out in rules. If you're trading something that isn't a high probability trend trade, make a checklist for it. The same way you make a checklist for a high probability trend trade, guys. That's all you got to do. All right, let me see who's in here. Who's new? I know we've got some of you in here. Demo users, first week, day one. How are we doing? Is it starting to make sense? Focus on the process. We're going to cover the process every day. Conrad, I think it's awesome that you're here, by the way. Good stuff. For those of you that don't know, in a different lifetime, Conrad sold software for Nexgen. And now he's coming back because he knows that it works and it's time to learn it, right? I love it. 20 years ago. Goodness. I can't believe it's been that long. That makes you old, Conrad. I love it though, but it works. It works as well today as it did 20 years ago, guys. You just have to learn it. I couldn't teach this class if I didn't believe in it. I couldn't. I believe in it wholeheartedly, but I do understand that it's a process to get to where you want to be. My job is to stick with you on this process. While you learn it, my job is to never walk away from you, right? To just keep you on the path to answer every question that you have. Yeah, it's maturity, right? The things you do at 20 compared to what you do at 40 are typically different things. Shogun, what's happening right now? What do you think? You recognize this pattern? Does anyone recognize what's happening right now in crude oil? Price reaches, Fibonacci. Large triggers are still above the reversal bar marker. What do we call that? No, not reversal off a one-to-one, Shogun. It's a gap theory, right? We talked about it. It's a vacuum, slingshot, gap, whatever you want to call it. Patterns in historical study tells us that price is likely to close the gap. That's it. That's it. It's not a long trade. It's not a short trade. It is a pattern based on study, letting us know a potential outcome, right? It's never guaranteed. There are no guarantees in trading. There's only patterns that are recognizable, that are repeatable. And it's pretty cool. Because, man, they love to repeat. And hopefully that kept you out of trying a short off the midband, right? Is it going to make it? I don't know. But patterns, gosh, I love patterns. Patterns create advantages. Guys, that's it for me today. Great class. Glad to have the newer people in here. Glad to have the older people coming back. Keep posting those pictures. Yeah, we'll see you tomorrow, Conrad. Keep posting those pictures, guys. Keep asking those questions. And remember, just because you made the decision to go live doesn't mean that you don't get to use this class anymore. Keep doing it. Bobby, I was talking about you last night. The hotel we're at is right on the river here in Washington, and it's right at a marina, and there's people living on their boats out there. I was like, man, I know a guy that does that. That looks amazing. Good stuff. Guys, take care. I appreciate you being here. I'm going to go look for some high probability trend trades myself, and I will see you guys tomorrow morning, 9 a.m. Take care, everybody. Be good.